All right. All right, everyone. Thank you so much for joining us here for another edition of our Franchise Your Business webinar and podcast series. My name's Tom DuFore. I'm the founder of Big Sky Franchise Team, and I'm very much looking forward to our session today. This is our uh, uh, current franchise sales and marketing trends that we like to talk through and go through, where we go over high level economic data. And I should start with, if you're new with us, this session here, we go through high level economic data, and then start drilling down into small business data, and then moving towards franchise specific data. This is going to be a bit of a different session for us. I actually am traveling and remote right now, so I am actually doing this uh, from from a vehicle parked on the side of the road here. So we're going to do our best for our session today. If you're unable to see me or my screen, please let me know in the chat. And as always, before we do get started, want to make sure you subscribe to our two podcasts. The first is the Franchise Your Business podcast. So if you're not subscribed, please make sure you subscribe to that podcast. Go ahead and give us a like. We'd love a review, a 5-star rating as well. And then the second is our weekly podcast called Multiply Your Success. Multiply Your Success on your favorite podcast channel. Go ahead and like that, subscribe, and give us a review. We love 5-star reviews there as well. And we have awesome weekly guests on that show. Franchise related, small business related, leadership related, marketing related, all things designed to help inspire you to improving and growing your business and yourself. And this session here is designed to help you be a better franchisor. So, meanwhile, as we are going through this for our live attendees, if you have questions, comments, concerns, please type that into our chat box. Raise your hand, type it into the Q&A, and there are plenty of ways to interact with me. I'm hosting this live by myself, so I'll do my best to address each of your questions as they come in. Now, with that being said, I am going to go ahead and share my screen so you can see what I'm doing, and we will get into the thick of it. So the first report I like to show is called it's from the Institute for Supply Management, their report on business, and this is their manufacturing PMI, the Manufacturing Purchasing Managers Index. And it reads, the U.S. manufacturing sector contracted for the fourth consecutive month in July as manufacturing PMI registered 46.8%, down 1.7 percentage points compared to June's readings of 48.5%, after breaking a 16-month streak of contraction by expanding in March. The manufacturing sector has contracted the last 4 months and at a faster rate in July. So if you're watching my screen, you can see here, starting in 2022, just almost a bit of a nosedive decline to go under that 40% break-even line. That's the manufacturing break-even line. The overall economy break-even line is 42.5%. So as the manufacturing segment continues to trend closer to that 42.5%, and you see it's accelerating here at 46.8%. So what does that mean? Well, for you as a franchisor, what that means, or for your franchisees or franchise sales efforts, to me, it means that the economy's soft. It just shows that future purchasing, manufacturing purchasers, uh, they are less confident of future orders, which means they're buying, because manufacturing is a leading indicator. That this is, what do the people who are buying the products to make the widgets, whatever's being manufactured, they think that demand is going to either stay the same or decline. So they're anticipating that forecast in the next 6, 12, maybe 18 months, maybe 24 months, depending on what's being made. So that's an indicator of what's going on. So all things said, this is, to me, indicating a relatively soft economy at best. So don't let any of the news cycles or politicians try to lead you to think otherwise. We like to look at, what does the data say for us to draw these conclusions. Next up, we have our report on services. Okay, so now this is from the Institute for Supply Management report on business. Services PMI at 51.4%. So in July, services PMI registered 51.4%, a 2.6 percentage point increase compared to the June reading of 48.8. A reading above 50% indicates the services economy is generally expanding, while 50% below indicates it is generally contracting. A services PMI above 49% over time generally indicates the expansion of the overall economy. So now we see services. Well, we look at this. Last month was clearly below, which meant we were contracting. This month we're just above that 50%. So what does this mean? Again, to me, this just means we're soft. We're just above. Manufacturing was just below this manufacturing number and trending toward that economy break-even line. This month, specifically for services, we were just above the line. Last month, we were just below. The month before, we were up. The month before, we were down. So it's up, down, up, down, up, down. What does that mean? To me, that just means things are a little soft. So in your franchise sales and marketing efforts, if people are saying, well, I'm not so sure about the economy, I don't even know why, right? They might even say, well, I don't even know, I'm not sure, but something seems, they have a sense. Well, their sense is based off of this data is on point. It is, in my opinion, a little soft. And it means that we're just kind of in this little flat zone, which has been what I've seen month over month for the last, call it, year and a half-ish or better, where it's just kind of been mixed. And when the economic conditions, in my opinion, are mixed, it just, we're not thriving, but we're also not crashing either. So when someone expresses that, it's like, well, we're not great, we're not horrible either. So to me, we're kind of in this middle zone, as we're figuring out, and we'll get into the inflation numbers here shortly. Okay, next up is the Hospital Purchasing Managers Index from the Institute for Supply Management. And it says the hospital PMI registered, I'm reading in the second paragraph here, it says the hospital PMI registered 53.3% in July, a 2.5 percentage point decrease from the June reading of 55.8%, indicating an 11th consecutive month of growth after a contraction in August of 2023. Okay, so if we look at the chart, if you're watching this, the chart for 2024, you can see in the beginning of 2024 really fell from a very high number, over 60%, fell way down into the first part, zigged back up, and now has zigged back down to 53.3%. Now, the hospital PMI is much more volatile than the other two reports that are produced by the Institute for Supply Management. And my opinion is partially it's their newest report, and hospitals are probably a lot more cyclical based on maybe flu season, whatever might be going on. I know where in our area, the flu, sinus infection, and COVID have just kind of been looping around, and people have kind of been going through that. Where we're back in school in our area, so kids have been out sick for a day or two as they're kind of getting well and getting back to school. So anyway, this is another positive indication, and they have the 50% reading here as well that shows that 50%, if it's above 50%, well, then we're in positive territory. Well, we're at 53.3, 3.3 points over. So that's positive, but in my opinion, again, it's soft. It's not a strong indication of saying, yes, we're robust and strong. To me, again, just this showing this kind of flat line. If you're watching, right, I'm just showing with my hand, kind of this flat line. We're not zooming up, we're not zooming down, we're just kind of in this flat line. Now, the last few months specifically have showed a pretty strong drop in hospital PMI, but again, we'll see that it is the last 2.5 years. You can see big zigs and zags in this report comparatively to the services, which has just showed a kind of a slow and steady downward trend for 2.5 years. And same with the manufacturing. It was kind of a rather 1 year of a quick downward trend and then relatively flat the last year and a half. Maybe a slight uptrend here the last 12 months, but it's kind of been relatively flat. Um, Okay, so I think I've exhausted that one. Point being that when your franchisees or prospects are talking about things being relatively soft, I think that's a fair assessment. And you should be prepared to have those conversations with them. Don't run away from it. Just describe what it is and say, and as a franchisor, start addressing how can we make the best of the reality we're living in right now? How can we make the best of it for our franchisees and not it's hard during the presidential election cycle. Politicians are great at saying the best of all time, or this is the greatest, or what have you. But let's look at the data. What does the data actually tell us here? Okay. Next up is the U.S. unemployment rate. U.S. unemployment rate is, this is from tradingeconomics.com, and it says the unemployment rate in the United States rose to 4.3% in July of 2024 from 4.1% in the previous month, the highest since October of 2021. And above market expectations, it would remain at 4.1%. In the meantime, the labor force participation rate edged higher to 62.7% from 62.6%. And this data is they source from the U.S. Bureau of Labor Statistics. I like the way that Trading Economics displays this, and you can see this upward trend in unemployment really starting from November of last year, where it was down at 3.7%, and then this upward trend really started in the first part of this year of 2024, and it continues to climb up. A positive sign is labor participation rate increased a little bit, 1/10 of a percent, it increased 1.1%, and that's a good thing, but that likely is not driving the unemployment change. So let's see what that looks like. But again, another indication that, well, rising unemployment, let's see what happens here. Next is the inflation rate. Well, inflation rate, it shows at 2.9% and that it dropped. And this is from tradingeconomics.com. It says the annual inflation rate in the U.S. slowed for a fourth consecutive month to 2.9% in July of 24, the lowest since March of 2021, compared to 3% in June and below forecasts of 3%. So I just like to highlight that seeing this trend slowing is good, and remember that the 2.9% is over July of last year, which was, let me expand this out and go to 5 years. So where were we? So July of last year was 3.2%, which was 3.2% over July of the previous year, which was almost the peak of the inflation rate, which was 8.5%. So June of 22 was the peak at 9.1%, then 8.5%. So you got to remember that this is an annual, this is a compounding. So as you start thinking about, well, why is it costing more? Why do I feel like I have less money? Your franchisees might say that. Your prospects might be saying that. And the reason is the value of the dollar has gone down as the amount of money that was put into the economy through government spending and stimulus that they were putting in, it caused inflationary conditions. There's just more money available, and during COVID, we had fewer amounts of goods and services that was available. So demand increased and supply decreased. It caused a big change in pricing as a whole. And now we're starting to see that stabilize here. And you can see as we zoom out since June of last year, the increases have been less. So as you start talking to franchisees who might still be worried about inflation, we can see it's hovering around 3.5%, somewhere in that neighborhood. This month in July, it dipped to 2.9%. But those are all indicators to me that, look, things are stabilizing. Again, it's flat. Right? Like I said before, it's just flat. We're seeing this, it's just flat. It's not up or down. It's not good or bad or positive or negative, in my opinion. It's just flat. And so expecting high growth numbers is setting yourself up for failure or disappointment, setting yourself up for disappointment. So tempering goals to hit, to be in what the current market conditions, in my opinion, is the right place to start with your franchise prospects, with your current franchisees. So just my advice on that. Okay, let's take a look at the Index for Consumer Sentiment. This is put out by the University of Michigan. They've been putting this out for, goodness, over 50 years. Let's take a look at the 10-year trend. And what I like to see here is, you can see down back in 2022, we see this, that was where the bottom was in 2022, and we see this nice little up and down. It's going up and then down, up and down, but the trend, you can see a trend line very easily, consistently trending up over the last 2 years here. So now we did see early in 2024 was our highest number, and it did fall back down, but it's right around the highest number that we saw in 2023, where we are today. So, we're starting to see a trough that's the previous year's high. To me, that's a positive sign that consumers are starting to feel more confident about purchasing and purchases. Now, you might see the last 2 or 3 months that consumer confidence may have dipped. So you might have seen in your franchise system revenues staying flat or dipping a little bit. Well, this might explain it if you were to look at this system-wide as more of a macro indicator as you're going through that. I'm just going to bounce back to look at the 50-year report just to do that, and I didn't really zoom in before. But you can see over the last 50 years, all the zigs and zags, and that we're zigging as a trend. I think we're starting to continue that trend up. Okay, next is one of my favorite reports. I'm going to see if I can zoom in. Maybe not. Well, okay, it's not letting me zoom in here. Sorry, guys. No, it's not letting me zoom in. Okay, well, I'll do my best with this, but this is the census. This is from census.gov, the number of business applications filed, aggregated. They aggregate all the state data, and what they show here is that there were over 420,000 new business applications filed in July of 24. And so when I look at that data, we're still over 400,000 new business applications. We've been that way for, it looks like, over 3 years we've been at that, or right around 3 years. Just incredible to see the surge of activity. Pre-2020, we were just around 300,000, and the last 3 years we've been consistent at over 400,000 new applications. If you're in franchise marketing, franchise sales, what does this mean? Well, to me, what this says that you ought to know is any prospect that inquires is serious. In my opinion, it's franchise sales, or excuse me, franchise candidates, and just it's kind of the ethos of the average American person right now is they have business ownership on their mind, starting their own business on their mind. So I think it's important to take inquiries seriously. You always should anyway, but the last 3 years, you need to be taking it very serious, because new business startup, they might not buy your franchise. They might start their own business. They might do something. They're thinking about starting a business. So just want to put that out there. Okay, let's see. Do we have any? Not seeing any questions. Okay, great. So next up here is this is from franchiseinsights.com. They release a small business startup sentiment index every month, and this is from August of 2024. And it says 57.5% of prospects agree that now is a good time for startup right now. And I think that's a good sentiment. That's more than half the folks that are thinking about starting a business are saying, right now, I want to start a business. I think now is a good time to do it. So uh, think about that from your franchise sales efforts and marketing efforts. Someone who's inquiring, half of those folks are probably thinking, I want to do it now. I don't want to delay. Um, one of the questions they ask about is in this survey. Let me see if I can zoom in here. There we go. If you're following along, that's probably a lot easier to see now. Okay, it says they ask a question: which of these factors will have the biggest impact in the next 6 months on your decision to start a business? Number one here, the number one factor: funding or access to credit, 64.4%. No other factor is even close. So keep in mind, almost 2/3 of people say funding or access to credit is their number one factor of starting a business. Number two is economic climate. Number three, political changes. And we usually see political changes uptick during an election season. Tax law changes, regulatory changes, stock market, other. All of those, I get it. Um, they're important and worth noting, and your candidate might bring it up. But at the end of the day, they may or may not tell you they're nervous. They might tell you, I want to wait until the election season's over. They might tell you, well, I don't know. I want to see what the Federal Reserve does. They might say those things to you. I've had prospects say that over the years. But what more than likely is our biggest concern is, how am I going to fund this? How am I going to get a loan to get this going? So if you can have a solution for them to help them through that, whether that's internal finance, in-house financing, third-party financing, whatever that might look like, having a solution there is important. So it's just reiterated and re-emphasized as we look at that each year. Okay, let's take a look here. One other data. Percentage of people looking to buy a franchise right now. Gen Xers, 47.6%, so almost half of the buyers today are Gen Xers. Gen Y or millennials are at just over 30% of the buyers. Then you have baby boomers at about 19% of buyers today. And then the balance is a mix between Gen Z and the silent generation. Which is a small percentage there of 2% or less. So the big buckets are Gen X, which has been right around half for a while, and then Gen Y with the millennials, which makes sense, right? Generally, someone between 40 to 60 is a more typical buying range for someone looking to buy a franchise. Okay, next I want to take a look at some new charts that came out from franchiseinsights.com. This is by Michael Alston. It was released August 21st, so just a couple days ago. And they run these reports where they ask, it says, for maximizing initial contact, consider the sequencing of channels that franchise prospects prefer. So right now we have a tie for first choice. Prospects say, well, I prefer voice and I prefer an email. That's their first choice. Second choice is a text message. Third choice is a voice message. So if we look at this, well, first choice then maybe is an email. Second choice, text message. Third choice is voice. So if you're going to choose, that's probably the order based off of this recent data that they published. Now, best practice is if you only choose one, do an email. If you only choose two, do an email and text. And if you can do all three, you do email, text, then voice. So just wanting to put that out there as what consumers tend to be preferring right now. Next report that comes out is this is one of my most favorite reports I see that Franchise Insights does. This is called More Than Financial Rewards: Being My Own Boss Motivates Franchise Seekers. This is by Michael Alston for Franchise Insights, released August 14th of 2024. And you can see from this chart, it's very obvious. Oh, there we go. I was finally able to zoom in. Okay. Be my own boss. This is from a survey they did in July of 24. Be my own boss. 85.7% of people said, This is the reason. This is my big motivator to opening a business, is to be my own boss. Second one is income potential. Third is lifestyle rewards. Fourth is side business or side hustle, and fifth is tired of climbing the corporate ladder. What does this say? Well, to me, this says, when in doubt, go back to remember why you were looking into buying a franchise. You wanted to be your own boss. To your current franchisees, remember, you have a conversation. Maybe they're upset, maybe they're disgruntled. Remind them, by the way, Mr. or Mrs. franchisee, remember when you bought into our franchise? You were so excited to be your own boss. Well, now you are. You're your own boss right now. And I know right now is a hard time, but let's also remember why you wanted to do this, to be your own boss, and now you are. And so it is hard right now, but boy, could you imagine being back at your old job, doing what you were doing before? And they'll say, "Oh my goodness, no way. There's no way I could go back to working in an office every day again, or there's no way I could go back to, filling out, TPS reports again. No way." And so remind some using this and it's not to use this to manipulate them. It's just to help change their perspective. Which, by the way, podcast episode you should listen to that we released is called Unconditional Power, that we released this week. It's about a podcast guest who talks about how changing your mindset or changing your perspective helps you take back control or power within your environment. So sometimes your franchisees or prospective franchisees are feeling that way. So this can help change their perspective. Okay. I talked about that already. And uh, now this is a report that comes out. This is their top 10 business opportunity categories, but I think they flip-flopped these about a year ago. And I did reach out to franchiseinsights.com and Franchise Ventures to let them know that I think this was flipped, but this is still the case that I'm seeing, that it looks like the franchise categories are actually listed in the business opportunity top 10 categories. So top 10 here shows home services at 23.7% of the share. And the question is, these are the following categories that have had the highest or greatest percentage of inquiries over the last 90 days. So the first category here is home services at 23.7%. Second category is cleaning and maintenance at 14.1%. Business services, 13.8%. Food and restaurant, 9.8%. Senior and healthcare at 9.3%. Pet services is really starting to surge at 8.2%. Retail at 4%. Child-related, 3.4%. Education, 2.8%. And automotive at 1.8%. So if you're in one of these top 10 categories, what does it mean? Well, it just means that it should be easier for you to find leads today. In my opinion, that's what it means. If you're not in these top 10, well, you should set your expectations appropriately for considering that, well, it might be uh, a little harder to generate leads of interested buyers today. So that's the session here today, folks. I'd love to open this up to some Q&A while we're closing this out. So for our live attendees, if you have any questions, feel free to raise your hand or type it into the chat box. And as we close out, I do want to, as you're thinking of a question you might have, remind you, we will publish this up on YouTube. We will make a post in our podcast. This will go live as a recording as well through our podcast, Franchise Your Business. So please make sure subscribe to our YouTube channel. If you like YouTube, it's Big Sky Franchise Team. Just search that in YouTube. Subscribe to our podcast, Franchise Your Business, and our second podcast, Multiply Your Success, that's been going 4 years strong and has really been growing in audience the last year or so. So with that, I'd love to thank you for your time. Thank you so much for being here. Again, my name's Tom DuFore. If you've ever thought of franchising your business, or you are thinking about it, or maybe you're in the midst of it or recently franchised your business, and you have questions or you'd like to learn more, give us a call, book a call with me or someone on our staff or team. There's no fee for an initial consultation to talk about how we can serve and support you as you're expanding your company. Thanks so much for being here, everyone. Have a great weekend, and we look forward to having you back on our next session. Thanks so much. Take care.